There are two financial systems in this world. One is the system you were taught. Work hard, earn money, save it, maybe invest a little, pay your taxes, retire someday if you're lucky. The other system has no classroom, no textbook, no teacher who will walk you through it, and the people who use it would prefer you never find out it exists. This is the world you don't know. In 1973, a young attorney named Bruce Overton was hired by one of America's wealthiest families to manage a single task: make sure as little of their fortune as possible ever touched the tax system. He spent 3 years studying structures most accountants had never heard of: shell companies nested inside trusts, nested inside foundations, nested inside holding companies registered in jurisdictions most people couldn't find on a map. When he finally presented his findings to the family, the patriarch looked at the document, nodded slowly, and said just 4 words. "This is how it works." Not, "This is how we do it." How it works. As if the entire system had been built this way on purpose. Because it had. Here is what most people don't understand about wealth at the highest level. The ultra-wealthy don't just earn money differently. They exist in a different financial reality. While the average person earns income, which is taxed, spent, and gone, the truly wealthy store value in structures that are almost invisible to the systems designed to count it. Let me show you exactly how. The first layer is the shell company. A shell company is a legal business entity with no real operations. It exists purely on paper, to hold assets, move money, or own things. A billionaire doesn't own his yacht. His shell company does. He doesn't own his mansion. A holding company registered in Delaware or the Cayman Islands does. Why does this matter? Because what you don't personally own, you are not personally taxed on. The yacht is a business asset. The mansion is an investment property. The jet is a company vehicle. Every expense becomes a deduction. Every asset disappears from personal ownership, and the tax bill shrinks to almost nothing. The second layer is the family trust. A trust is a legal structure where you transfer ownership of your assets to the trust itself, which is controlled by a trustee, often a lawyer or a financial institution. You no longer technically own your wealth. The trust does. This means when you die, your wealth doesn't go through probate, the public legal process that exposes what you owned and triggers inheritance taxes. It simply transfers invisibly to whoever you designated as the beneficiary. Generational wealth isn't built by working hard and leaving money to your children. It's built by constructing legal structures that make the transfer of wealth almost frictionless and almost invisible. The third layer is the private foundation. This is perhaps the most elegant structure of all. A private foundation is technically a charity. It exists to give money away. But here's what they don't tell you. The founder of the foundation can sit on its board, can direct its investments, can pay themselves and their family members a salary for running it. And the money inside the foundation, it grows tax-free. So the ultra-wealthy don't just donate to charities, they build their own. And in doing so, they move enormous wealth into a structure that is sheltered from taxation, controlled by their family, and legally protected in perpetuity. The donation is real, but so is the benefit. Now, here is the question that should be sitting with you right now. Is any of this illegal? No. Every structure I just described is entirely legal, used by accountants and attorneys in every major financial center in the world. So why don't most people know about it? Because the system that teaches you about money, school, employers, mainstream financial advice is built around the first financial system, the one designed for people who earn wages. The second system requires knowledge. It requires advisors. It requires a certain level of existing wealth to set up. And it requires that you know it exists in the first place. That is the real barrier. Not money, knowledge. The world you don't know is not hidden behind locked doors. It is hidden in plain sight, in legal documents, in offshore registries, in the fine print of tax codes that nobody reads. The question is no longer whether this system exists. You now know it does. The question is what you do with that knowledge. Observe, reflect, discover what has always been waiting in plain sight.